Roger Dodger heard he can take money out of his company without having to pay top up tax if he enters into a Division 7A complying loan agreement. It's like borrowing money from a bank, so the loan needs to mirror arm's length terms and conditions. He goes and sees his accountant Mitch to learn more about it. Mitch says, "So, you need to pay interest and principal by the end of each year. The interest rate is set by the ATO each year. The loan term is a maximum of 7 years. So if you take out 700,000 as a loan, the principal and interest payments due by 30 June each year is around 118,000. Mitch produces this loan repayment schedule. So say in year 1, you have to pay $118,000, and that is made up of 87,000 in principal and about 32,000 in interest. And by the end of the year, your balance will be $612,000. Roger goes, "So every year I have to pay 118,000 to dodge a coat? Where am I going to get the cash? I would have already spent it on the boat. Can I roll it over into a new loan?" Mitch goes, "No, you need to pay $118,000. No, you can't roll it forward into a new loan because that would not be considered a real repayment. And so Div 7A would capture it. And the amount that you haven't paid or the shortfall will be a deemed dividend." Roger goes, "Darn, I see. Can I capitalize the interest at least? Maybe pay it off at the end of 7 years?" Mitch goes, "No, you can't. Anything less than 118 will become a deemed dividend." Roger goes, Okay. Can I get Dogeco to forgive the whole loan then?" Mitch goes, "No, debt forgiveness is also caught under Div 7A. The whole thing will be a deemed dividend. Listen, Roger, most people just get the company to pay out a dividend to fund the minimum repayments." Roger goes, No dividends. I'll have to pay top up tax, and you know how much I hate top up tax." Mitch goes, "Yes, the dividend will be subject to top up tax, but at least it's only top up tax on 118,000 rather than the whole 700,000. That's like a difference between 29,000 versus 170,000 top up tax." Roger goes, I see. So this allows me to take out 700,000 to buy my boat now, but I can spread out the top up tax over 7 years. Mitch goes, "Yes, that's right. But so you know, there's still a tax cost. The interest to Dogeco is income, and so Dogeco has to pay tax on that interest income. And you have used the money to buy a boat. That's private in nature, so you can't claim a tax deduction for the interest paid to Dogeco. So effectively, the true cost of this complying loan agreement is the tax on the interest income, which is around 40,000 over 7 years." Roger goes, So that's an extra 40K in tax over 7 years to spread out top up tax of 170,000 over 7 years. So I'm not actually getting away with Div 7A at all. In fact, I'm paying more tax." Mitch goes, "Tax deferred is tax saved. Plus, you get to buy a boat tomorrow.